Well, good afternoon, everybody. Welcome to Sharpen Your Edge and Learn to Trade Fearlessly. This is session 3, analyzing the trade. Now, this is going to be kind of a two-part lesson today. First is going to be about analyzing the trade, and the second part is going to be about journaling and journaling your trade. Let me let some folks in here. So let's start with the first part. This is called analyzing your trade. And let me mute Mark out there. All right, the only trading performance you need to concern yourself with is just your own. We don't compete with anyone. We only compete with ourselves. Don't worry about what anyone else is doing. It doesn't matter what they're doing. And most of all, especially, don't listen to the myths or unrealistic internet advertisements. Generally, traders, as far as I know, don't turn 100 into $1 million in less than a year. I certainly didn't. There may be some out there who have, but I've yet to meet them. So let's talk about review and analyze your trades daily. First off, you've got to do this consistently. Okay, there can be no exceptions, really no excuses. You really need to do this every day. The benefit of this is going to become clear as I go through this lesson. You want to review the trades you've entered and why you entered them. Okay. You want to review trades you did not enter and why as well. All right. Was there a reason you didn't get into that trade? Did something not feel right? Was the momentum not there? Was there something going on with the MACD that didn't look right? Was it a short candle, or was it retracting when you thought it should be advancing? Any of those things you want to make note. Use your trading platform to review how the market or markets, or if you're trading more than one market, perform that day. So, for instance, we're going to be using the 1-minute Heikin-Ashi chart and MACD indicator. And I'm going to go through a list of what we are looking at, what we're looking for in our 1-minute Heikin-Ashi chart. For those of you who are new, that is the lower right chart. The lower right chart on our 4-chart system that we see, and we're going to bring that full. But let's go through the things that we're going to note. First off, let's note where crosses occur. Let's note, was there an opportunity at the cross? When did shifts in the market direction occur, right? When did that momentum turn around? When did it go from a sell-off to a swing high, or from a swing high to a sell-off? When did momentum or trends begin or end? These are all things we should be considering. Were there things that affected or created the cross? Okay, so let's take a look at some of that stuff. I'm going to go ahead and bring up, this is our current chart today. Let me bring minus that a little bit and just bring it up full. Okay, there we are. All right. So what I do at the end of every day, the first thing I do, and you can do this a couple of ways. One, you can go ahead and go under this hamburger menu on the top right. If I can bring it up, there we go. And you can take a screenshot. And this will just simply give you a screenshot of this, or you can do as I do, and I just do Control-Shift-4 on my Mac keyboard, and I go ahead and copy the whole thing, and it gives me now a copy that I can keep. It's on my desktop. But the first thing that I do every morning is I want to look at each of the crosses. So I'm going to mark those. I'm going to use my annotation tool in Zoom, and you can use that, or if you have Photoshop, or if you have any way to mark it up, you can do it on screen as I do it, or you can print it out and go ahead and mark it up with a pen. Either way, it doesn't matter. So first thing I do, I'm going to draw. I'm going to go to a line. I don't want a vanishing pen. I'm going to go and I'm going to circle each one of the usable crosses. All right, that's not really one. Okay, little things like this, don't mark them. They don't matter. Short little crosses like this usually don't matter. I am going to mark this one, and I'm going to mark this one and this one. And that's really all just a continuation of the same one. I'm going to mark this one. I'm going to mark this one, and this is what I do is I go along and I circle each one of these, this one and this one. We go back to the beginning and we go, okay, was there a viable trade here? Well, let's look. There's a cross here. If we took this straight up, yeah, there was a trade here. It was a little late in the trade, but it was there. Oh, I forgot to mark this one. This one, definitely. We'd marked it all the way up here. There's definitely a cross there. Definitely a good trade there, not there. We come straight down from this one. And remember, we want to follow our rules, right? What are our 3 rules for getting into a trade? Well, first off, it's a cross on our MACD, a cross either above or below. When the cross crosses above, we're looking for a call trade. When it crosses below, we're looking for a put trade, like so. Okay, that's the first thing. Second thing is there a Heikenausi entry candle? If there's not, we wait for a Heikenausi entry candle. Heikenausi entry candle, as you recall, is just a candle that does not have a trailing wick on it. So on a bullish candle, there wouldn't be a bottom side wick. On a bearish candle, there wouldn't be a top side wick. Bearish candle is red, bullish candle is green, right? Remember that from our training days. So we just go along on these crosses. We go up to each one and see, okay, yes, there's a viable trade there. Yes, viable trade there. Yes, viable trade there. Yes, viable trade there. We go through all of these. Yes, viable trade there. Viable trade there. Viable trade there. And finally, a viable trade there. Okay. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 chances for trades in the day so far. Just up to 11 o'clock, there was 1, 2, 3, 4. How many trades did we have this morning? We had 3 trades this morning. So we utilized the cross pretty well this morning. Okay. I know we took a couple of trades off of this swing down, like so. All right. So once I do all that marking, I'm going to clear all this stuff out. Once I've done all that, I'm going to go back and I'm going to look at my filled orders and entries, or my filled orders, and look at what time I entered a trade. All right. So I'm going to go back and I'm going to go trade 1, trade 2, and trade 3 was my trades. Now we can get into analyzing. Okay, when I made this trade here, was it when a cross occurred? Yes, it was when a cross occurred. It was trending down. Was there a trade opportunity at the cross? Yes, there was. Okay, so those look good on the trades. One of the big things that you want to ask yourself is, did I utilize all of this trade? Could I have stayed in longer? Okay, these are questions that we want to ask ourselves and answer and put into our journal. Okay. Then we want to look at, when did momentum trades enter and end? Again, this goes back to that started, that ended there. And we want to be aware of when these trends happen, how they followed the MACD, or how the MACD actually followed the trend, and see when they started. Again, a new cycle started up there, a new cycle started there. And did they correspond with the crosses? Yes. Oops. Yes, they did. All right. So we want to mark all this stuff up. You can do it much neater than I can, but mark all the stuff up, but really make note of when you got in the trades. Okay. How long after the cross did I wait to get into that trade? Now, something I've been noticing in my trades, and I'm going to see if I can show you this real quick on camera. Um, this is my trade journal here. I don't know how much of it you can see, but you can see that it's all marked up. I write down my trades and turn that off. I write down my trades and I write down my notes next to my trades. Now, some trades, things are going fast. You can't get in all your notes. That's fine. Um, make some sort of note so you can go back and do this after. But usually, if you look at the chart and you mark where you got into trades, when you got out of trades, you can pretty much see what was going on in the market at the time, right? Was I in the middle of a trend? Did I have any reversals in that trend? But mostly, you want to ask: did I get in on time? Did I get in too late? Did I get stuck in a reversal? Okay. These are things that we want to write down and we want to make sure that we have all of. So again, going back, we're going to mark where the crosses were. We're going to track those up to the proper entries on the candle chart, on the candlestick chart. We want to determine, okay, were those good entries? Okay, that's all good. And then we want to overlay our trades. T1, T2, T3, 4, 5, 6, however many, and write them in and note where they are. Was momentum picking up? Momentum being when we see longer candles and longer wicks. That's momentum. This whole area in here was all great momentum. Most of it in here was all great momentum as well. Let me clear all that. There was absolutely great momentum there. These bearish trends had great momentum, followed by these bullish trends. All these great trade opportunities, right? We want to look at these and we want to make note, because part of what's going on is you want to ingrain in your memory these patterns, these trends, when they start, when they finish, and notice that, we only stay in for a fraction of these trades. One thing that we're constantly working on is staying in the trades longer, maximizing the win, and minimizing the loss. Okay, our current stop is between 20 and 30 cents. We can tighten that up. I'm starting to notice that we can tighten that up, that when a trade generally gets to 15 cents below, most of the time it doesn't come back. So two things that we can work on. By just looking at these charts, I can already tell there's two things that I need to work on. One is I need to stay in trades longer, and I need to close out bad trades sooner. Now, I know the closing out of bad trades is a tricky thing to do. It really is. But we can offset that quite a bit by taking advantage of these long trends. And every day we get these kind of trends that we can stay in. I see them all over our chart right here. Okay. So that's it. You want to mark up everything, get that all ready. Now you can do one of two things. I save these as a sheet in my trade results. I just have a folder I call trade results, and I save it by the day. But typically, the lessons you draw from this, you can see all on the chart, right? Did I get in late? Did I get in too soon? Did I miss an opportunity? Did I take full advantage of that opportunity? And that starts by noting where every cross occurs, evaluating whether there was a trade opportunity at the cross, where there were shifts in market direction, when did the momentum trends begin and end, and were things affected, and what things affected the cross. That's less important. You can just chalk that up to market maker, what affects the change in direction. It's pretty much the market maker. Okay, let me head back to, first off, let's get rid of all the drawings. There we go. And let's go from current slide. There we go. Okay, let's move on to part 2, which is journal your trades. Have a journal. Now, everybody on the call should have a journal at this point, right? Should just a notebook, either a 5x7 or something larger. I use a 8x5 inch because it fits in front of my keyboard, and I can always write my notes down with my mechanical pencil, and everything is good there. Now, you must enter information in your trading journal, right? It's hugely important. If you don't take notes while you're trading, you're not going to be able to do anything at the end of the day. I mean, you're really not going to be able to take advantage of what the notes will bring you, what they tell you. All right. And also making notes on the TOS screen like we were just doing. You can make notes in a spreadsheet if you like. I find that a little cumbersome for me since there's some great softwares out there for doing this, and we're going to talk about that in a minute. You can also dictate notes into a recorder on your computer. If you're an Apple user, it's easily done. You can use Siri to set that up. And also, if you don't want to do this manually, you consider using some trade tracking software. All right. Now, some examples of trade tracking software are TraderSync, TradeZilla, TraderView, TradeMetria, TradesViz, and of course, Microsoft Excel. Now, I've used TraderSync. When I was with the previous company, we had an arrangement with TraderSync where they allowed us to use it. And the great thing about that is that we could port the trades from TOS directly into TraderSync. So by the end of the day, you could go there, and there was all kinds of analytic tools within TraderSync that allowed you to parse out your trades and get a lot of information. All that said, I love the efficiency that technology brings me, but I love my little handwritten trade journal as well. I'm just used to it. I've been using it for years, and I've got books and books of my trades and trade journals out there that I can go back and look at. But that's how I enjoy doing it. I like doing it with a book. All right. Things you want to make note of. Make note of factors that affected the market today. So overall market performance and direction, this is at the end of your trade. You're going to write this down. And it can be something as simple as the market was trending up, the market was trending down, or the market trended down till 11 a.m., then reversed direction and trended up. You can even make note of where the Dow was, where S&P was, and where NASDAQ were at particular points. This is all good information for informing you about your day and about the trading day. All right, was there news, market related or non-market related, right? Did something big happen out in the world today? Did a war start? Did a war stop? Was a presidential candidate almost assassinated? The big things like that affect the market. And most importantly, events like major economic data reports like the Fed, bond auctions, and the Fed Reserve, as I just said. These are things that affect the market each day. And this is why we do the report in the morning that Keith brings us, because these things do affect the market. And these are good things to note in your book. right? I always write down when they're Federal Reserve, and I'm writing down when all the bond auctions are, and taking note that when we have bond auctions, they're either perceived positively or negatively, and the market will perform accordingly, depending on how it perceives, or how, at least how the market makers perceive how the bond auction went, because it has a direct correlation to trading and to events happening in the market. So you want to plan for these events again in the future, and they occur over and over, often at specifically scheduled dates and times, namely the Fed announcements, right? When we're going to have rate changes or rumors of rate changes. We probably have a big one coming up in September. It's looking like we might have our first rate lowering happen in September, or at least that's the rumor that's going around. We want to be prepared for that. And we prepare for that by writing it down and knowing when it's coming. Number one, we're usually here to trade those, but for some reason I'm not, or Keith isn't, or someone else who can take the room isn't available that day. You want to make sure that you take advantage of that day, because we've definitely got a big one coming up in September that we want to make sure that we make a note of. Okay, questions we want to ask. Am I trading the right market? Am I making good decisions on my trades, right? So we've analyzed our charts. We've put down our trades, 1, 2, 3, 4, 5, 6, whatever it is. We've correlated it to the candlesticks. We've seen where we've gotten in and gotten out as it relates to trends. We've noted, did we get in early or did we hesitate? This is a huge thing, and I'm fighting a bit of this myself right now, is over-analysis and hesitating. There's a sweet spot at the beginning of the trend that I've noticed that I've been missing a bit, and I can back it up by 10, 20 seconds, my trade entries by that much, and gain all that movement where I would have waited and gotten in and maybe not gotten a positive trade. So anyway, the analysis of our charts shows me that. And that's how I can answer that question. Am I making good decisions? Am I entering the trade at the right time, right? Next to each one of my trade entries, I always write my trade entry, my trade exit, and I always write it that right on time, late, early. Mark that on all my trades. I want to make sure that I always have that and be aware of that. And that's how I've learned that I've been getting in trades late. Because when I go back to the chart, the 1 minute Heikin Ashi chart, I can see right on the chart that I got in late. The cross had already happened. I waited too long and got in, and probably got lucky on several trades that they didn't reverse on me. Make a note. Are we exiting the trade at the right time? No, almost universally, every one of us can say, no, we're not exiting at the right time. We should be staying in these trades longer, getting much more. That way, when we do have that occasional loss of 20 cents or even 30 cents, we're not getting knocked off balance because of it. We have enough stuff in the bank that it doesn't kill us. Am I in the trade for the right amount of time? Well, that's determined by when I got in and when I got out, right? What is the right amount of time? Well, the right amount of time is get in just as the trend starts and get out just as it's finishing. We can always go back to, getting into the trade at the cross, no matter what, and staying in that trade until there is an encompass candle. Remember encompass candles, right? They happen near the end of the trend. We can certainly go back to that and try that. Are we taking profit at the right time? No, we're not taking profit at the right time. Well, that's not true. We are taking profit at the right time because most days we are profitable. So that in itself says we're taking profit at the right time. We take small bites out of what we're doing, out of our trades. Generally, that's what we do, is take smaller bites, but we want to increase the length of those trades in order to get at the right time. But again, the whole point here is unless you do the analysis on the 1 minute Heikin-Ashi chart at the end of the day, you're not going to know this, right? If you don't write this stuff down, you're almost for sure going to, at the end of your trading period, you're going to blow off the rest of it and not know what you need to work on or what you need to improve on. So this is just hugely important. Okay. So you've written all this down. You've got it in your book. Now, when reviewing your trades, you want to note the following. What did my best trades look like and why, right? When you can look at a trade and you can see that you covered most of that trend, that's what a great trade looks like, okay? What do your worst trades look like and why? Okay, you know, a bad trade is I got in the trade and it immediately reversed. And it not only did it reverse, but I let it go all the way down to 30 cents. I let it go all the way to my stop before getting out. Okay. Those are what my worst trades look like, is when I let it hit a 30 cent. And we had several of those yesterday. Those are not good trades. We could have gotten out of those earlier, or have we gotten in them at the right time? Had I gotten in, I'm sorry, I'll take responsibility for me. Had I gotten into the trade early enough, that would not have happened. We'd have been in and out of that trade before the reversal happened. But again, I wouldn't have known this unless I did the analysis. What an average trade looks like and why. We are doing a lot of average trades now. A lot of average trades are, you know, anywhere between 5 and 10 cents return. Those aren't bad trades. Those are good trades. They're great trades, right? Anytime we can book a 10-cent win, absolutely, that's a great trade. But did we take full advantage of what was available in that trade? No. So it's an average trade. We get a lot of average trades. So you want to mark those down as well as an average trade. Are there days of the week when my trading results are better? I've not really seen any correlation between days for myself. So I can't say that one day or any other day is better than any other. I know Mondays tend to be a little slower. We may have less trades, but here it's Wednesday and we only had 3 trades. Well, we have a second session that we're going to get into in a few minutes. So you answer that for yourself. Are there times of the day when my trade results are better? Yes, absolutely. I know for me that, you know, the first hour of the market is the best time to be trading. The last half hour tends to get slow. We make far less trades in the last half hour than we do the first 45 minutes. So the sweet spot for us on most days is the first 45 minutes, followed by the last hour of the market. Okay, last part of this is know your numbers. Calculate your win-loss percentage and know your number. I'm going to show you something kind of surprising. Calculate your win-loss dollar amounts, P&L, right? Just your P&L, and know your numbers. Calculate your profitability, which we will call R. I'm going to explain this in a minute, is how we derive R. And this is truly the true measure of success, is what your R is. And by the way, I just want to mention that, again, big thanks go to Brian Beal for preparing the outline for today's lesson. Did a bang up job on this. And I love this part about R that we're about to get into. But thank you, Brian, for bringing this, preparing this today. Okay. Following your trade plan and rules, right? This is something else goes in your journal. Did I follow my trading rules? Yes, no, why not? Did I get spooked out of a trade? Was I following the rules? You know, was I following the cross first, the Heikin-Ashi entry candle second, and was it close to a zone 3? Those are our 3 entry criteria. Did I follow my trading plan? Yes, no, or why not? Okay, these are the overall questions you want to answer on your journal. And what are my results when I follow my trading plan versus when I do not? Well, that's going to be real evident in your results. Your results will tell us if you followed your trading plan, and your results will tell you if you followed the trading rules versus when you did not. They should be real obvious. You're going to have way more wins when you follow the rules and follow the plan than not. You know, on average, when you're really tuned in, you're going to be somewhere between 80 and 90% wins. Now, another thing is you can go and use Thinkorswim's on-demand feature called On Demand. Not on-demand feature, it is the feature called On Demand to simulate trading, to replay trading days or specific time periods, and to backtest ideas. Now, this is awesome. I love this, and I'm going to show you here real quick. Let me share desktop 2 or desktop 3. Didn't do it. Let me try this again. Desktop 3. And it's not going over to it. Okay, I'll just talk you through it. On the main screen, you've probably all seen it on TOS, is a little button called On Demand. And we will do a lesson on demand in the future. But whenever you want to go back and replay a day, you have to wait a couple days to replay the current day. But you can use the on-demand feature of Thinkorswim to go back, and it's a time machine, basically. You can go back and completely replay the day. And you can do it in real time. You can do it at 3x, but you can go back and you can see how trades developed, how opportunities developed in real time. I think it's one of the best features on Thinkorswim. Okay, so that's the on-demand feature. Now, don't focus on your wins and losses. Take a look at your profit and your return, which is R. You don't have to be right on every trade every time. You want to minimize your losses and let your winners run. Now, this has been in every trading book I've ever read, and I've read a good amount of books on the topic, and almost everyone does the same thing. Minimize your losses and let your winners run. That's how we're going to start tightening up our stops and take more advantage of the trends and let the winners run. Okay.
Excuse me, Tim, we're still seeing the option chain.
Oh, gosh, I'm sorry. Can you see it now, Brian?
Yes, thank you.
Okay. All right. I want to show you how to figure out R, figure out return. Take any given set of wins and losses. You want to tally up your wins in dollar amounts and tally up your losses in dollar amounts. And you want to divide your winner by your losers. And in this particular example, this will give us a 1.65 ratio of winners to losers. Okay. Now, notice an R of 1.65 still means that you are 65% more profitable on your winning trades than on your losing trades and able to stay in the black. Focus on increasing your R, and you will not only stay in the black, but continue to grow your account over time. This is huge. Brian introduced this to me yesterday, and I love using this ratio that really breaks down where you really are in terms of your wins and losses, okay, along with your P&L. Okay. If you evaluate that above equation, those above 10 trades only by a win and loss percentage, you'd be disappointed because you were only right 40% of the time and wrong 60% of the time. While we want to be right more than 40% of the time, we must remain profitable. If we're not profitable and blow up our account, then we don't survive to trade another day, right? So this is really the true way to figure out profitability, is by doing R. And I'm going to back it up again to this. If you want to take a screen grab, of course, I'm recording this, but if you want to get a screen grab of this, this shows you the equation to get the ratio to show you your profitability. I'll let that go up for a minute. Okay, guys, do you have any questions at this point? That was crystal clear? Okay, I'm going to go ahead and stop the recording right now.